The first balance day adjustment we're going to do is a prepaid expense. That occurs when a business pays for an expense in advance, so that is before it's actually consumed. So on balance day, not all of the expense has been used up, and some of it will be used up in the future because we've prepaid it for oncoming periods. Looking at an example, a firm reports quarterly, so that would be from January, February to March. And on the 1st of January, it prepays $4,000 rent for the next 4 months. So you can see a payment's been made on the 1st of Jan to cover our rent from January to April. But our problem is our balance day doesn't actually end at the end of April, it's going to happen quarterly, so we'll need to figure out our profit at the end of March. So what we need to do is on balance day, split that prepayment into 2 parts. So the first part will be the expense. That's the amount that's been used up or consumed. All the economic benefits of the prepaid rent in January, February and March have been used. And the second part will be an asset. That's the rent that hasn't been consumed yet. It will provide economic benefits in the future, so that's an asset. So looking at our thorough definitions, we'll say we'll have an asset of $1,000. Why? We've got a resource that we control. We've got a legal claim to April's rent. We can legally stay in the property. There was a past event, we prepaid it on the 1st of January, and it will provide future economic benefits because we can rent the property in April and run our business. The expense of $3,000, going through the definition of an expense, there's been an outflow of economic benefits. We've consumed rent for 3 months. There's been a decrease in assets, what's called the prepaid rent asset, and we'll get to that later. And lastly, there'll be a decrease in owner's equity as this represents an expense. So, in terms of our financial reports, the $3,000 rent would go in the income statement under other expenses, and the asset would go on the balance sheet under current assets because it's going to be consumed in the next 1 month, and obviously all current assets are consumed within 12 months.